Joining us now, Bob Dudley, BP CEO. Also with me on set, Bloomberg's chief energy correspondent, Javier Blas. Good morning, Bob.
Good morning, Guy.
As you sat down, you kind of said it. Great deal, got to be followed by great numbers. The gearing's down, the debt's down. I'm assuming all of this is a kind of message to investors.
I think it shows more confidence than we've had in a long time. It's the sixth quarter in a row we've delivered results or exceeded it. Our gearing is coming down. Gave us the confidence to raise the dividend for the first time in 15 quarters. So we've got momentum and people are pleased. Feet on the ground, but people are pleased. We keep advancing.
What are you hearing from investors about the deal?
I think initially people were concerned that we were off to the races and we were going to break our financial framework. And number one message of the way we structured this is we're going to stay within the $15 to $17 billion of capital framework. We're going to continue to divest assets to offset part of this deal. We're going to continue to increase distributions for shareholders. Discipline, I think, is the main word. And we're still planning the company in the 50 to 65 range rather than these higher prices.
You have paid more or less all the money that you need to pay this year for Macondo, for the U.S. Gulf of Mexico spill. You're also guiding investors to expect that your spending is going to be at the bottom of the range. I mean, it seems that you are setting the scene for a lot of cash generation in the second half. How do you see cash generation?
Well, it depends on the oil price, right? Right now it feels firmer rather than softer. There's a lot of uncertainty in the market. Again, we're not planning for these high oil prices, but this deal will be effective as of the 1st of July when it closes in October. It'll have the economic benefit of that. The first part of this deal is likely to be at higher prices. The company is operationally working well. We brought on 3 new projects this year. We've got 3 more to do before the end of the year. So I think things are on track.
When you are looking at the oil market, the wider oil market, what are you looking at the moment? What do you think is firmer?
Well, I think we used to be geopolitical uncertainty wasn't clear and you weren't sure it was priced in. I think everybody's watching this now. You look at the uncertainties in the Iran sanctions. What will that mean for the markets? Venezuela is a human tragedy unfolding, and unfortunately that's going to affect the oil markets. You have outages in Libya and Nigeria from time to time, and you've got tensions coming out of the Persian Gulf recently. On the other side of it, demand is keeping up, production's keeping up in the world. U.S. production will rise. It's a bit bottlenecked in one of the big basins, the Permian Basin. So there's offsetting factors here, but it just feels like it's firmer rather than softer for the rest of the year.
So the second half of the year, when you kind of sit down and look at the balance sheet, either sort of side of the ledger, you're thinking the second half of the year looks glass half full? You're kind of, that's the vibe that you're getting?
Well, on this transaction with BHP, half of it in cash, half of it in equity, started to be paid over a 6-month period from October onwards. That'll give us the choice of either issuing the equity or the cash. So we've got options out there. We'll see, but we're making sure we're within the discipline of the framework. We'll divest assets to offset any dilution effects. So we've got options here to respond.
CapEx at the bottom end of the range. Is that because there's sort of still deflation in the supply chain? Is that because the deals, we were kicking this around earlier on, is this because the deals that have been done were done kind of at the bottom and therefore the suppliers that you were dealing with were giving you a good price?
We're seeing around the world not really oil field inflation. There's lots of rigs in the world, offshore rigs. The yards in Korea, which were so filled, are looking for business. So we're still seeing some deflation around the world in the oil and gas industry, with the exception of certain services, and they're moving up in North America because it's a very heated activity. But broadly, we're able to do, I would say, 40% more per dollar of activity than we did 4 or 5 years ago at $100 oil. I mean, the cost structures have really come down. So we're able to commit to the same range, 15 to 17, out through 2021.
Bob, the only black spot I see on your numbers today is oil trading has a small loss in the quarter. What happened? It's very rare to see BP losing money in trading.
We've got a great trading organization, but once in a while, it doesn't always come in on the plus side, so a very, very small loss. I'm not worried about it. It's a great team, and that was on the oil side. The gas side made money. So
I saw WTI all over the place on the quarter. Is that one of the main reasons of the loss?
I think that's what you find when a lot of people got a little bit caught up in the bottlenecks in the Permian, and we had some of that.
Not to be repeated.
Not to be repeated, no.
When you are kind of looking forward and you're trying to figure out exactly what is going to be going on, do you worry and you've sort of slightly answered this, but I just kind of want to go at it from a slightly different angle. Do you worry that we're in a situation where we're underinvesting? You talk about the capex being at the bottom of the range, and that's because actually you can do more with less. But is there a risk of underinvesting? Exxon's kind of pushing hard, but nobody else is at the moment.
Well, for us to keep within this frame, we have more activity going on now than we really ever have. 7 major projects last year, 6 this year, more next year. We can do it within that frame. We're bringing on lots and lots of activity. I think for us, I feel pretty comfortable with the levels of investment we have. The industry worries about not spending enough and repeats those figures. There's probably some truth in that broadly in the industry, but what people aren't saying is you actually can do more with $1 today than you could have before. So it's not quite as dramatic.
They're not so comparable. No.
One of the big also pluses on the results, Rosneft, you have a big investment. You were in Russia for many years, taking care of that relationship. Did very well on the quarter. How is the business going on in Russia?
Javier, Rosneft is a very professional oil company. We just came back from the annual meeting. You should look at the materials presented there. I think it's a company that is restructured itself. It's got more to do. And it's also highly leveraged to the oil price, and you start to see it coming through in the results. So I'm very optimistic about the future of Rosneft. And
second half getting better?
It is getting better.
Yeah, this is a set of numbers that the market is likely to react strongly to. You're raising the dividend. You're talking about things getting better, not worse. The gearing's coming down. How many more boxes has Bob Dudley got to tick at BP?
I think we're just getting back to the way we should be running the company. I think it's. I mean, we say the company's firing on all cylinders. The uptime of the upstream, the downstream, alternative energy. All those things are operating at levels that they should be. And we've turned around and retooled the company over 7 years. So it would be good just to get back to being an efficient.
But is that job done
company.
for you? Is that kind of you had a mountain to climb at the beginning? You're at the peak now. Is it like I'm assuming this maybe not the peak, but close to the peak. But things are kind of, as you say, back on an even keel. It's been a tough mountain to climb.
For everybody.
Do you stick around and enjoy the view, or do you take the cable car down?
I love what I do. I serve at the pleasure of the board, and we've got just a fantastic team, a real team of people. Every once in a while in your career, you work with a high-performing team, and this has just been high-performing for years now. It's a joy to work with them.
Bob, you travel around the world. We were talking before coming to set. You're not going to have much holiday. You continue traveling. You're talking to peers, other executives. How do you see the global economy doing, particularly with trade wars starting to, I mean, not brewing. I mean, we have real trade wars.
Well, Javier, just this week we sat down with Spencer Dale, their economist, and looked in pretty good detail what we see global growth. So our projections, 3.1 this year, 2.9 next year, global demand for oil and gas still rising. Aside of all these tensions, we don't see it in the near term affecting our business in the energy markets.
Great to see you, Bob. Thanks for coming to see us.
Thanks, Guy.
Bob Dudley, the CEO of BP.